Alright traders, so the stock market has just opened, and what I can see from a price action perspective is I have a downtrend working lower, followed by a break, and a new extreme was formed. Now this is telling me that the downtrend is over and I'm no longer paying attention to shorts. Now we are working higher, and you guys can see during the market open, prices consolidated around this exponential moving average, and notice how the EMA got flat, indicating a congestion area, and there was a nice short trap, new low, first entry short, pullback, second entry short, failure. And when I count for longs from the high, we have a new high, first entry long, pullback, second entry long. So these were two high probability setups in one. And after information that the downtrend played out with the break and a new low, strong push above EMA, indicating this is a good buying opportunity. But I don't recommend taking trades right around the open because a lot of times it can get too fast and there can be a fake out trap. Alright, so I'm resuming the video after quite some time because I extended the structure to make it a big trading range. We are at the highs of the trading range. Right now the spike and the channel has a break and a new extreme, but there really wasn't a good opportunity for me to jump on board unless I caught this high low, which was quite aggressive. So unfortunately, no good entry close to EMA. There was a second entry long, but it was exactly around the news. Two-legged pullback, second entry long. You expect new high of the spike and the channel. But right now, EMA keeps holding prices and we keep pushing higher. So let's see what's going to happen. All right, so I'm resuming the videos. I'm going to take a felt second entry short. Going to move my stop loss one tick below the signal bar. We have new low formed, first entry short, pullback, second entry short, failure. We have a second entry short above EMA, and I would prefer for second entry short to close above EMA. It looked like it will not form, but once this bar closed, it managed to push above EMA slightly. Prices pull back. I'm going to tighten this. So right now, anything we make on this runner is just a bonus. In case market does something unexpected, I'm leaving one contract open as a runner. But why I like this trade? Because we had an uptrend working higher. We broke this trading range. We came back, tested the breakout area, which is indicating to me that right now I can go long if we stay above exponential moving average. And we have new low, first entry short, pullback, second entry short, failure. A nice bullish bar. It ended up forming quite nice. Felt second entry short. We tested the breakout area, which is the main key level. And this told me that I'm safe to go long if you push above EMA. And also there was a first leg down, pullback, second leg down. So there's a two-legged pullback, downtrend played out with the break and new low, indicating to me that I am okay to go long. And I need to get new high for this major uptrend. All right, traders, so I'm resuming the video because I'm going to tighten the runner really tight because the uptrend right now has reached new extreme, and I don't think prices are going to continue skyrocketing from here. For that reason, I'm going to tighten this really tight to make sure I squeeze as much as I can out of this runner. Because you guys can see two legs down, key level is holding, strong push above EMA, and right now we have a new high for this initial uptrend. And we keep working higher, so I'm going to tighten this below this bar right here. And I tighten this way. I don't just take my target profit randomly, because in case we keep pushing higher consistently like this, I want to be part of this move. And had I taken my runner somewhere around these areas where I thought there are highs, I would have, got rid of a couple of points. So for that reason, when I think I'm going to exit early, instead of me just dragging the target profit lower and lower, I just trail it really tight so I can stay in the market as long as I can. In case something like this happens, we'll get around 10 points worth of a runner. So this is going to be a fairly decent run. I'm going to redraw the uptrend like this. Let's see if we can get a couple more ticks out of it. But this is now, we are quite far away from EMA. We will probably pull back. But once again, key level tested high of the day, breakout pullback, you broke, you tested it. And the fact that you cannot push below EMA, once I see pullback to the key level, I observe if we either going to push below EMA and the trading range will be the main pattern, or if this key level will hold, push above EMA, and that means that this bullish trend will take place and we are going to get new extreme. And the second entry short above EMA is probably going to trap a lot of shorts that go against the overall trend. So I'm just waiting for these high probability setup, variations of a two-legged pullbacks, and let's see if we can get our 9.5 points. And we got stopped out here. So great runner. I think we squeezed almost as much as we could out of this. All right, quickly resuming the video, as we just reached new high, indicating to us that this uptrend is over and we expect correction or possibly reversal. So even though you have a second entry long here far from EMA, or visual two-legged pullback, you have to resist the urge to take long after you just received a new high for this initial uptrend. There was a very tempting lower high, first entry long, second entry long failure. Lower high would confirm the failed second entry long, and a lot of longs got trapped at these highs, but it was still above EMA. And after such a big move up, it really takes some courage to go short. You really need to trust price action rules, and you never know whether there's possibly a wider pattern developing. So to me, it felt a little bit too early just yet. All right, traders, I'm resuming the video as I'm going to take failed second entry short, new low, first entry short pullback, second entry short. I'm going to tighten my stop loss one tick below this signal bar. I'm going to move my runner at these highs, and we have new low, first entry short pullback, second entry short. We see the downtrend didn't really manage to keep pushing lower. Instead, we pushed strongly above EMA, and it looks like it resumed the uptrend. Now this uptrend is confirmed, or at least it get a lot of confirmation off of these lows. It is quite congested, so it is a little bit aggressive, but the risk is not too big. It's something around 2 points only. So I'm okay with taking this risk right here, going long on a failed second entry, short above EMA. We just need a couple more ticks. And this is not looking good when it doesn't hit on the first go. Really wanted to see it spike on the first go. Let's see. We just need a couple more ticks. Come on. Market is very slow, but I like it. First entry short, second entry short. EMA keeps holding. The main pattern keeps showing bullish momentum. And we got out. Perfect. So this was our second trade for the day. Failed second entry short. High probability setup. New low. First entry short, second entry short. Above EMA indicating bullish momentum. Back to back. Same pattern right here. And this is what you do when you see break any new high, but prices are not pulling back to show bearish momentum. Instead, you see a strong bullish momentum back above EMA. So this is telling you something is changing, something is different. And then you look back and you see, okay, this uptrend was quite strong. We managed to trend higher from this very failed breakout. And then you start looking for possible wider pattern. So when you see so many confirmations after you bounce off of these lows right here, this is when you can start to look for wider pattern, and you're just sticking with the trend, following the patterns, following the trend line rule. I don't think you want to go long right here because you would have to find a channel really early, but you wouldn't have it confirmed. You have an early little break here, so it is much better to wait for the failed second entry short, the truly high probability setup. All right, traders, I'm going to tighten the runner really tight again. And we got stopped out. We took another 2.5 points on this runner because it really looks like it will come back and take the break-even stops. It is too slow. It is barely chopping higher. So we can continue pushing higher, but I will be more than happy to take 2.5 points to cover the commissions at least. And very satisfied with 2 good trades that produced a fairly decent run. But you guys can see, focusing on the high probability setups, following the rules. All right, traders, so these are our 2 trades for the day. Scalp was right here. Runner, we took 9.5 points. And then we took around 2.5 points for the second runner. I'm gonna wrap it up. If you made it to the very end of this video, you're probably enjoying the content. So if you want to learn more about day trading, subscribe to the channel, like the video, and I'm going to see you guys in the next one. Take care, everybody. Prices broke the channel and continue pushing lower back to this key level. And this is important because key level may come into play, but notice the support is not holding at all. Instead, prices are continuing pushing lower. So at that point, there is a downtrend working lower, and there is a first break for the downtrend. So going to trendline rule, we expect new low to be formed. So high probability setup would be a 2-legged pullback second entry short. And this is the lowest low where we would start our count. We have a first entry short, pullback, second entry short. But by that time, it's way too big. It's so close to these lows, even though it worked. I cannot mark it as a high probability setup. Then this is the highest high of this pullback. And we have a first entry long, second entry long failure, which is tempting. But after you form a new low for this downtrend, you never know whether you're barely going to make it and then it's going to bounce. So unfortunately, I think it's better to just sit here and wait for prices to resume the downtrend or continue pushing higher. And you can see that there was additional leg down. And once I saw this leg working lower, this is where I thought that there may be a larger downtrend. So I identified this channel because not only you have one break and new low, do you have another break, another few pushes to a new extreme. So it's starting to look like the downtrend is strong. And notice what you have. New low formed, first entry short, pullback, second entry short. In a bearish structure, this is the first leg up, pullback, second leg up, and uptrend has a break and a new high, and this is a great bearish signal bar. So this is a great two-leg up pullback at the key entry point at the EMA. It is not congested, big bullish bar, big reversal, bearish bar, up down bar, great high probability setup. It worked enough for a scalp and then it's strongly reversed. Now, this is quite a strong bullish momentum. We had a two-leg up pullback to EMA, but the body is far away, the downtrend is in play. I don't think we want to go long. Break and a new extreme occurred, which is telling you that the uptrend is over. But notice what happened. Price is traded below this exponential moving average, created a break, new extreme, and this is a two-leg up pullback down. We have a first leg down, pullback, second leg down, and instead of prices continuing working lower, there is a strong push back above EMA. And now, it's important to understand the bigger picture, because if we zoom out, we can see that the first trading range is showing signs of bullish imbalance, because this downtrend was supposed to reach the low of the day, and the fact that it didn't happen and it strongly reversed back up, even though uptrend has a break and new high, there is a bullish bias now in this market, and once you have a break and new low for this downtrend and strong push above EMA, this is where you are looking for longs again. So you combine the overall structure, the overall bullish bias, with the fact that you even have a break and new high. So you don't have to be too scared to go long even when you see break and new high, because the main bigger bias is telling you that it's bullish, and you pushed above EMA and you have new low, first entry short, trigger below this bearish bar, tick higher, second entry short, and at the same time this is new high, first entry long, second entry long. So this is a failed second entry short and a second entry long after downtrend played out with the break and a new low. Great bullish bar. This is a high probability setup because the two setups in one, very similar to this first setup that was right at the open, new low, first entry short, pullback, second entry short, a new high, first entry long, pullback, second entry long after downtrend played out with the break and new low, following the price action rule. And at that point on, you can see that there was a little trading range and prices kept slowly working higher. Now, when you see this, you can be inclined to draw uptrend like this, but when I was watching this, I wasn't sure about this channel, because remember, structure looked like a trading range overall. This is not a strong trend by any means just yet. So this looks to me more like first leg, correction, second leg up. And in trading range structure, once I see this pattern, I'm hesitant to take second entry long. In fact, I was expecting for this second entry long to fail quickly and form a late second entry long trap. You guys can see it probably barely worked for a scalp, but eventually it continued pushing lower. So you have to be careful drawing the wide channels in trading ranges until they are proven. We have a first leg down, pullback, second leg down. You see the market likes to move in pairs of twos. Downtrend working lower with the break and new low. It is too sideways, too congested, EMA in one of these bars, so you don't want to be taking long. Only after you have a second leg down, first leg, second leg, and it's forming confirmation for this bullish trend line, this is where you can potentially now think about going long. You can see prices managed to push above EMA. It kept holding, kept confirming this important key level, and this key level right now has first two swings, third swing, fourth swing, and fifth swing confirmation of this bullish structure. So this is the key entry point where the high probability setups appear, and you have a new high, first entry long, pullback, second entry long. Now personally, I would probably wait for failed second entry short, because this is double bar entry and limit order would never come back. It shot up higher quickly. So it depends how you would have entered this. But this is not a bad entry, first entry long, second entry long. Unfortunately, the failed second entry short never really triggered close to exponential moving average. And once you see structure like this, you see that you keep creating series of higher highs, higher lows. You see the EMA is pointing up. EMA keeps holding the prices. And you're just looking for two-legged pullback at the key entry point, high probability setup. You have new high, first entry long, pullback, and you just keep resetting the count at each new high that is higher than the previous high. And you just have a bunch of first entries, and then finally you have new high formed with a first entry long, pullback, second entry long, and at the same time, lowest low, first entry short, pullback, second entry short. Any second entry short above EMA in bullish uptrend is going to be considered a trap. And once it formed above EMA, these are two high probability setups in one, and this is very borderline to being a good entry. You know what? I will mark it. It is more aggressive, definitely, because the signal bar is not bullish, but on failures, you can take slightly worse signal bar, but context-wise, perfect entry, and market is about to close. So this is the overall bigger structure. It ended up being very strong uptrend to close the day, but you have to follow the rules at this point on. The key entry point is proven. Two-legged pullback is going to be high probability setup. Make sure there is no congestion, draw the shortened channels, and make sure the signal bar is great.